price will take care of the entry in where silver is ultimately going. It's a headlong rush, and you can see it on COMEX, you can see it on the LBMA, you can see in the drawdown in Shanghai. There's a premium on having the real thing in your hands. And
physical metal in Shanghai sitting at $96.71. Premium on average is $11.40, which is roughly about 13.5% over spot.
CME is rapidly losing credibility because of this nonsense. Bank of America, their lead precious metals analyst, came out and said that they see, because of the gold silver ratio being so far askew, that they could see silver hitting $300 by the end of this year.
Would you please give us an idea of when you think silver is finally going to hit 200 per ounce? Many thanks. Why is CME halting trading at the end of the day today?
Who's taking possession of almost 39 million ounces? 5 100-ounce silver bars are going to weigh 40 pounds. You are talking a fleet, 2 blocks, 3 blocks long of semi-trucks. Where is it going? Who's taking possession of it? Isn't that really all you need to know? What else do you need to know? And instead, this is the APs, the authorized participants, which are the big banks, that are taking gold out and silver out of the ETFs very privately without going into the open market and creating what the Commitment to Traders report sees and standing for delivery, which is very, very, very visible. And so this is why I hate GLD and SLV. Not only are they, fully custodied by JP Morgan and BlackRock, but the big authorized participants can create these shares and then pull the metal out quietly. And it's kind of like when we saw the price collapse in silver from 120 down to 65. The prospectus says there's a time lag between when they will book the order and then the shares are created. The shares are only created when the bars go in. So they booked the order at $120. The price collapsed, and at the very bottom, 38 million shares
are created,
found their way into, and they're only created when the metal is deposited. Right, so it's almost, did they really buy it in the 60s? But take the orders at 100 plus, knowing it was going to collapse. These are the things that the ETFs allow. If you own an ETF, you're part of the problem. Get out.
And the funny thing is that you bring up the ETFs because, again, I know that ETF gold holdings rose to an all-time high in January. So even though there was craziness going on, the gold-backed funds, they continued to add to their assets in February. They added 26 tons of gold last month. Their total holdings was almost 4,200 tons. And even with the pullback in gold, these gold funds hit new all-time highs of $701 billion. So, I understand. This was the 9th consecutive month of positive ETF gold flows globally. And I think the only other 2 times that it happened that way with 9 months was during COVID and during the financial Armageddon. Those are the 2 times.
And the only other thing I want to mention that's probably on a lot of people's radar screen is what we've seen come out of the private equity world, BlackRock and Blackstone, both
redemptions.
Yeah, and the redemptions were far greater than they really cared to do. BlackRock gated, meaning the prospectus says, well, we can, if we need to, only allow up to 5% redemptions. They had double that amount. So they paid the 600 and whatever million out of the 1.2 billion in requests. They gated it and said they will pay the rest later. Blackstone did the opposite, and they did it, I think, to save face because, in essence, their managers, the
PMs
in themselves, they came up with $400 million and put it into the fund so that they could do some redemptions. But the point of it is that once you start to see private equity, which was sold to the public as being very liquid, quarterly liquid, the realization is that it's not really that liquid, especially if everyone wants their money at once. And if you see a liquidity problem where people start saying, instead of what's the share price, how do I get my money back? That's a problem. And once you see that jump from private equity, it goes directly to the banks and to the insurance companies and to the reinsurance companies. Then you really have a problem. But don't worry, I'm sure it's contained, just like we've been told before. So I think there are a lot of things that can happen as not only a result of this war, but a result of a wayward sense of trust around the globe.
We talk about it every week, trust,
and
the breach of trust that we're seeing all over the place. I think that's common theme here.
And that's gonna so indirectly these kind of things can spill into places like private equity, BlackRock and Blackstone. And if that gets into trouble, the spillover creates things that no one even saw coming.
I mean, look, if you're talking about Blackstone and BlackRock putting, collars and gating on redemptions, I do think it's a reason to raise your eyebrows.
Of course
it is. I mean, you're talking about monsters, huge Goliaths in the industry, and they're saying, well, hold on. We're not going to give everybody their money.
And there's some reality that if they dump everything, you blow up the fund. But that's the point. It's that, if enough people say, give me my money, then you have a problem. And so liquidity is an issue in an environment, little by little, then all at once. As liquidity dries up, first there's a little bit and a little less and a little less, and bang, it's all gone. And then people need their money, and then the whole system starts to
break.
Like we saw in 2019. Let's take some questions.
All right, here we go. Starting off with Henry Padilla. If you would address the issue of GSR getting to an attractive place, and also the issue of gifting precious metals to families so as to avoid leaving them a tax situation. Certainly I think that the GSR, an attractive place, still stands to reason. Andy and I still believe, at least I'm not going to speak for him, but I know what his numbers are. As we approach getting under 50 is a good time to start to peel back a layer of the onion from your silver and start putting into some gold. As it goes down, maybe another 5 or 7, GSR points from there, you peel back another layer and you start doing another little bit by little bit. That way you're always taking a little bit from a higher, or a lower GSR, ratio. I think that's a smart way of doing it.
Bank of America, their lead analyst, their lead precious metals analyst, just came out and said that they see, because of the gold silver ratio being so far askew, that they could see silver hitting $300 by the end of this year. And 309, I think, was the number. The guy's their lead precious metals guy, and he says that in the light that he sees gold going much higher, and historically silver will have to come along for it, and will probably slingshot the way that it typically does. He's basically saying that he sees silver going much higher in the face of higher gold, which would present an opportunity probably to capture that gold silver ratio. But to your point, Kevin, I wouldn't start really thinking about it until it's in its 50s, and I would only do some of it. I think that's wise.
Andy, would you please give us an idea of when you think silver is finally going to hit 200 per ounce? Many thanks. I can answer this one for you.
Great, because I can't.
Okay, it's going to hit 200 after it hits 150. There you go.
Like you're like Karnak.
Hey, listen, I just know. When you know.
Remember Karnak?
Yeah, of course. I'm like this. Yeah. When you know, you know. Why is CME halting trading at the end of the day today? I didn't know that the CME did halt trading. Did you?
I'm sure it's just a glitch.
Yeah, I'm sure it is. If it's metals, then it's a glitch, right? It's unbelievable.
2 of them on the upside, 2 of them on the downside, but it's just a glitch.
We'll look into it. I wasn't aware of it. We were swamped, but I know it's definitely trading right now because I see that the futures right now are at 87.53, and for the day it's showing up $3 and just about 1 cent, which is about a 3.5. Gold is sitting right now at 51.42, up around 38.10 from the close. So they're both on platinum sitting at 21.79. So
CME is rapidly losing credibility because of this nonsense.
Sweeney 55. How long can the price difference continue between East and West?
Until there's no metal left to sell.
Yeah, and I think we're literally one big delivery away from that happening.
Yeah, and a lot of people are confused because I read an article from my buddy Alistair McLeod, and I even think he was confused that saying it's not possible to arbitrage because the VAT eats into the premium, but the VAT is the responsibility almost always of the recipient, and not even until it leaves the exchange. So right now you have a $13 and a spread and a 13% VAT. That's how bad they want it. And if you're choking on dollars and you're looking for ways to find value for dollars that are losing value, well, you buy it when it's uneconomical. So what? The price will take care of the entry in where silver is ultimately going. It's a headlong rush, and you can see it on COMEX, you can see it on the LBMA, you can see in the drawdown in Shanghai. There's a premium on having the real thing in your hands. And an easy way to say it is that the metal is worth more than the dollars that are used to buy it. And if they're choking on a dollar surplus, what better way to get rid of it than things that are eternal?
And as we speak, we have the price of physical metal in Shanghai sitting at $96.71. Premium on average is $11.40, which is roughly about 13.5% over spot. So look, it can go on, but eventually, like Andy said, eventually it's going, price discovery will happen through the physical channel.
Yep.
Eventually that's what's going to happen. So let's go through. All right. Hey, this is from Wayne Robertson, 7011. Hey guys, question. If the whole metals market is controlled and is, what does your guess of what's going to happen in a honest market?
Rapid price discovery. What does that look like? When futures control the market, what would price have been had we not seen a glitch on Thanksgiving Day? What would it have been had we not seen a glitch last week and then falls by $4 immediately? What would price have ultimately done if the circuit breakers are working on the way down?
That's what my biggest question is.
And so when you have a market that's never truly been allowed to find price discovery, that is finding it the hard way, the old-fashioned way, where it's really about physical supply. In an environment where physical supply through these channels never mattered, it does now. And so I think much, much higher, not only because we don't know what it's really worth, but also because I think you have ultimately a problem with the value of the dollar. I think in dollar terms, higher than most people would bank on. I'm not telling you to buy it for that reason. Conversely, I kind of am, not to become wealthy, but because holding your wealth in dollars has proven to be a losing game. And we talk about this house example all the time, where price of gold in 2005 was $450 and the average house was 240,000. That's just over 500 ounces. Your house doubled. It's 500,000 across the board right now, average in this country. So good investment in dollars, but was it? Because it's lost 500% in gold, where those same 510 ounces right now are worth $2.6 million. It buys you 5 fully furnished houses instead of the one house that you doubled your money on. So anyways, saving in dollars is a sucker's game, period. So I think
saving dollars destined to go broke.
Yeah, it'll go higher than you can imagine in the light of both.
All right. Let's see. That's another one.
That's in 20 years, by the way. It's not
that far off. Sure not. Question. I saw price stuck on Kitco and I Google search it and appeared it halted today at before 3 p.m. I was on conference calls today from 2:30 on.
I wonder if it has anything to do coinciding with, what the sharp drop in oil.
In oil, right? Would it surprise you?
No, that's what they did last time.
Right, exactly. And by the way, what people have to realize is where there's smoke, there's fire. And when there's blood in the waters, the sharks come out. And what I mean by that is, so if we take on January 29th, for example, and we saw that when the market opened and the circuit breakers should have halted trade, the algorithmic traders out there, and there are so many of them with such insane buying power and capability, they just lay in. They just lay in and lay in and lay in. And that's the reason why they were able to so easily push it down 30+%. And of course, where was any, by the way, the chances of silver or gold for that matter going up more than 10% on any given day is virtually nil.
Right.
It wouldn't be allowed to happen. The powers that be.
You mean not silver and gold, you're talking any other asset.
Well, I'm saying without any halt, the fact that silver and gold, if equities go up and the futures go up, I mean, look, it's hard for the Dow to go up 10, 15% on a daily basis because it's basically all the other companies that have to do the same thing. But Silver going down 35% on that day, and the circuit breakers not triggering, that is not nearly as much of a shock as I don't believe that silver or gold can ever go up 30+% because the circuit breakers wouldn't have worked. It would be working.
The server would overheat.
Right. And there would be nothing to cool it down, and they have to shut it down. Right. But my point is, it's just on the downside where they want it to be is when it's to their benefit.
And at what expense is it to their benefit? Because you're beginning to see the mass exodus. Like we talked about February, there was roughly 24 million ounces delivered in the February contract, a non-deliverable month or a non-delivery month. They can still take delivery, not a primary delivery month. 38 million ounces left COMEX. Left. So 160% of what was delivered or could be explained by delivery left. And who's taking possession of almost 39 million ounces? If and I keep saying it, 5 100-ounce silver bars are going to weigh 40 pounds. Who's taking possession? That's 500 ounces of 39 million ounces. Right. You are talking a fleet, 2 blocks, 3 blocks long of semi-trucks. Where's it going? Who's taking possession of it? Isn't that really all you need to know?
That's it.
What else do you need to know? These people are not messing around at this level. Is it the Exchange Stabilization Fund? Is it the government? Maybe. It is critical. Exchange Stabilization Fund says if it's for national security, which critical minerals by definition are, you don't need to tell anyone or get congressional approval. So maybe they knock it down on paper, stand for delivery, and bye-bye, out it goes at a very, very cheap price. Would anyone put that by this administration to do that? And I'm not saying anything bad about it. Maybe it's cunning, right? They've played this game long enough to suppress the price so people wouldn't, sell dollars. Well, what if they're doing it themselves right now, knowing that they need to accumulate this stuff before the music stops? Could it be? I don't know. I'm just saying. So expect volatility. But in the end, the deliveries by these people who are more sophisticated and more informed than any of us combined is all you need to know. Chill a little bit.
Yeah.
The price will take care of itself.
100%. PJ Bowler, 3129. If the military will always require silver, which they will they ever let silver reach its true price in the market? Well, that's what we're talking about. I think that at the end of the day, true price discovery will come from the physicality of the market.
Well, first of all, silver is inelastic, and the propaganda I'm spewing about silver needs in the military industrial complex, go to silverwars.org, check it out. I'll find the article that was just printed, and it was fantastic. Someone sent it to me as well. I'll send it. I'll post it. But it's inelastic. There's only a little bit of silver in comparison to the overall cost. And price floors that the administration wants to put in place is to incentivize domestic mining. So can you really cap a price when it's globally sought after and universally depleting? I don't think you can. In fact, maybe they want it to go higher. Maybe that's part of the game plan, is to get everyone out there mining it for the U.S. government and let it just go much higher. I don't think they care about the cost.